Good morning, everyone, and welcome to the Daily Trader with Kevin Hincks. I have two paper money trades for you today on two high-profile names, Nvidia and Meta Platforms. Both in the news today, both moving, and we'll look at paper money trades in both those names. Now, let's get to our first one, and that is Nvidia. Market's up big today. Nvidia's moving, as you know. Let's look at our strike prices for trades if you were considering a bullish trade in Nvidia. Now, with Nvidia trading right about $104, we're going to look at something in the diagonal family, called diagonal, taking a bullish posture in Nvidia. Going out to the May 16th expiration. Remember, Nvidia has earnings on May 28th, so we're still ahead of earnings. That won't be the case in Meta Platforms, but in Nvidia, not till May 28th. So we're going to go out to the May 16th expiration by the 103 call. Look at the expected move. Remember, we're midweek already. So you've got to start to tighten up those strikes because the expected moves are coming down ever so slightly. Using that right column on the Thinkorswim platform. Selling the April 25th 107 call. So only $4 wide on this diagonal. We put that in around $5.05, trading about $5.20 right now, $5.15, $5.20 range as the stock has moved slightly higher. So the risk on this is whatever the debit paid. You're looking for a move. Remember, the move for the rest of the week in Nvidia is still $9. I'm sorry, nope, that's not, that's next week, $4. That's why we've got that lined up a little inside that. Could you do the 103 or 104, 108? Of course you could, yes. But for this, remember, the most important thing is the strategy. So the 103, 107 call diagonal in Nvidia, trading about, about $5.15, $5.20 range. You're looking for a move towards that 107 strike, and the risk on this trade is the debit paid. You're collecting theta. You're long about 27.5 deltas in Nvidia per each call diagonal. All right, let's get to our second trade of the day, and that is Meta Platforms. Another stock moving on the day, currently up 6%, up $30 on the day. Meta Platforms, they had a ruling today, fined by the EU, about $299 million, I believe it was, right around that range. Again, we're looking at bullish postures in Meta Platforms, the call diagonal. This time we went out to the May 9th. Why? The May 9th, because Meta has earnings on April 30th. So we're 2 weeks wide in Meta Platforms, and I'll show you why that's important. So buying the May 9th 535 call, selling this week's April 25th 550 call. And for that, we're spending a debit of about $23.65. Now it's $23.25, right around there. It's come down ever so slightly. But here's why. With the earnings event being next week, you could, by definition, extend duration from this week into the earnings event week. And that's why you're spending more than the width of the strikes. So for this week, spending about $23.15 on a call diagonal, buying the May 9th 535, selling April 25th 550. That's the risk on the trade. Remember, there's two break-evens on this because you're spending, at least for this week, more than the width of the strikes. If you extend duration into the event week, that'll probably reduce that significantly. But that's the way you want to look at this. The risk on the trade is always the debit paid. This week, you're looking for a move towards the 550 strike. But you've got to understand the earnings dates, the events that are out there, and how to navigate around, through, and on top of them when you're trading these options. So we did a call diagonal in Nvidia, safely ahead of their earnings event, and a call diagonal in Meta Platforms, straddling their earnings event, one with the long being after and the short being slightly before. All right, that's our show for today, everyone. 2 risk-defying strategies today. Have a great day. We'll see you tomorrow with another edition of the Daily Trader. I'm Kevin Hincks.